Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 22nd of April, 2026. Leading into the close, we had VP Vance, the Vice President, head to the White House. It was earlier reported that he was heading off to Islamabad for the peace talks. Then stocks were around about flat, and then the market was heavily shocked by the fact that he was there to tell the president that he was cancelling his trip overall. Stocks, well, they didn't crater, but they dropped about probably anywhere up to 0.8% in the S&P and the Nasdaq in particular, and the Russell, before one of what I can only describe as a new world record for taco, whereby oil was up about 6%, and then Trump said he's extending the Iran ceasefire at Iran's request, or he didn't say it was Iran's request, he named a senior Iranian official and implied it was at Iran's request. So, of course, stocks back to flat or slightly up in futures in the aftermarket, and oil's dropped about 4% since then. So we're getting down to the brass tacks now, the 25-minute tacos. Look, I'm sort of at the point now where, that's just explaining what happened overnight. These are the only two numbers that matter, I think, for markets at the end of the day, is how much this is going to cost the consumer and how many days to normal supply. There's a lot of conspiracy theories floating around out there at the moment. There's been 11 refinery fires in the last significant refinery fires in the last month or two, which is up 5 to 10 times the normal rate of any sort of fires. There's talk around, well, they're running at full capacity, they're overrunning them, but there's there really hasn't been any official response on any of them. We've gone from Romania to Texas to Australia to Myanmar or Myanmar. They're globally, it's happening all around the world here at the moment, and that's really going to it's obviously going to really affect further supply. The Chinese are now having a very difficult time getting natural gas supplies and chemicals for manufacturing, and so which leads into the next conspiracy theory, which is that this is all part of Trump's plan, that it's 4D chess and et cetera, et cetera. So look, we're never going to know. I'm not going to speculate on it. I highly doubt it, because I don't think he would make yourself look like such an idiot. But everyone's leaning towards, Trump must want the strait closed, which is just, there's blind optimism, and then there's that. So Apple was down 2.5% after the first change in leadership in 15 years. Tim Cook stepping down, but he's going to be chairman still. Look, it was just broad weakness overall. We still had a bit of strength in AMD and a couple of the chip makers, etc. But I wouldn't say overall that it was a particularly strong market. We had obviously we finished right on the highs here, with oil being at like 92. Just I think it pipped 92, and that obviously drove up that oil sector there. And look, the more and more. There's more and more talk around this mythos or capybara model from Anthropic, and how dangerous it is, etc. From a cybersecurity standpoint, you've got Palo Alto and CrowdStrike just continuing to power on here. Coming out of those horrible lows. We've got ServiceNow coming up in the next, tomorrow night. So we've got quite a few. Got quite a few coming up overall. So United Health posted better than expected profits above Wall Street estimates, on track for a turnaround. It was up 6 or 7% overnight. That was one we were flagging here to keep an eye on. That's that green spot there. That square used to be a hell of a lot bigger, but not so much anymore after 2 years of pretty bad, some pretty horrible turmoil. And yeah, look, it's, as I say, going back to the days to normal supply and how much it's going to cost the consumer. Markets are just large. They're just so earnings focused and largely over it, the Iran thing. But we just had, when there was the 25-minute taco this morning, I was watching two separate news channels over the course of the morning. Everyone was just laughing at Trump, essentially. This stuff's kind of irrelevant because it's all bounced back now, and these technicals are relevant because it's all bounced back in the aftermarket. We're on indefinite ceasefire, whereby the Iranians won't come to the table to talk peace until the US blockades, and the US is blockading until the Iranians will come to the table on peace. So it's that's commonly known as a stalemate. So maybe this news story just drifts off into the background. Who knows? I really do get the feeling that inflation numbers, this month and next month, and in June, and growth numbers, and actually watching the effect of these high gasoline prices and cost of the consumer play out in the economic numbers will probably be the catalyst for any sort of next leg down, rather than it being geopolitical based. It is just becoming increasingly obvious that the market is over the entire situation. They don't really care. They're probably only going to care when the numbers come through and they're shown to be inflationary or denting growth, and they're focused on earnings now. So I would expect just broadly. I think we'd start to see. You saw uranium get hit. Lithium drifted a little bit as well. Crude was up, but it's come back again now. Gold and silver got a little bit hit because they're, just generally, I think there was a little bit of strength in the US dollar. But to be honest, I'm not. There's still a lot of speculative money in those guys as well. But the US is okay for for energy. They've got a lot of natural gas. They've got nearly enough in refined petroleum products. I'm really looking at this critical minerals part of the curve here, of this bar chart curve here. That's what they're lacking, and the refining capacity as well. And if you lean into the conspiracy theory that Trump's trying to slow down China with this closure of Strait of Hormuz, then there might. I think you've been buying him some time to try and lock down some of those critical mineral supply chains or whatever, or use as a bargaining chip. Given that tariffs didn't work and they're now refunding $130 billion to businesses, not to consumers in the US, maybe this is a new tactic. Who knows? Look, it's I think the continuous blitzkrieg of surprises and pivots and tacos and whatever, is it's one of his tactics, and it's only, and I'm sure he's always been like that, and it's only that there's just not been a president who's like that. That's probably the surprising thing. We had RTX and Northrop Grumman in the defense sector overnight have really good earnings reports, and United Health as well. Obviously, I spoke about before, but the defense guys were huge spending on defense. Forward books, etc. It was already really priced to perfection. Both of those stocks off about 4%, despite beating top and bottom lines, and having pretty solid like outlooks. We've got Tesla coming up, Lam Research, GE Vernova in that SMR or small modular reactor space. ServiceNow's in there as well tomorrow night, and then you got Amazon and Caterpillar later in the week. And then, I would imagine ExxonMobil. I can't imagine having a bad result. I would imagine so. Plenty to watch out for the US earnings. We've got about 2 recommendations out so far, and we basically flagged United Health as not necessarily a recommendation, but one that was, if you were light on healthcare, to potentially have a look at for portfolios. Micron was another one earlier in earnings season that's absolutely taken off. So if you want to get these recommendations live, get them into the palm of your hand via the mobile push notifications or via email, etc. You just need to subscribe to Mosaic. You can get a 1-month free trial, and Yeah, just go to mosaic.mpcmarkets.com.au or go to mpcmarkets.com.au and have a look through and get a Mosaic log on. It's still pretty cheap anyway, but you'll get your first month free with all of those recommendation services. We do have a structured investment at the moment for those of you who have got ETFs and index ETFs. Or particularly, it's a 3-year buying the dip deal on the S&P 500 index. So you get the lowest Monday settlement price of May through October. So your entry price is basically taken care of at the lowest settlement price on a Monday over that period, and then it's 2.5 years from being long the S&P 500 index at 5 to 6 times leverage. Which is a really good capital efficient way to be long the index and free up some cash to do some other things with, or be it income investments or other opportunities, etc. But don't just hold on to your index ETFs and just tie up a load of capital. You can spend 17 odd grand here, get exactly the same exposure over the 3-year period, and then you've got 83 grand to go and do with as you wish. Capital efficiency is what the big boys don't tell you about. They just accept your money and charge you management fees on your ETF. So, worthwhile having a look at that. Just scan the QR code and get on board. It's available to retail and it's available to sophisticated investors. The initial investment is also tax deductible. Scan the code and inquire about that. Buy the dip today. That'll really ride us through the upcoming period of probably a fair bit of uncertainty, and then the last 2.5 years will be the very reliable Trump self-interest, or the Trump put, in terms of policy going forward, and making sure that he has another term where he gets to say the S&P was up 68%. When I was in power, that was his last term. I'm sure he'll be aiming for that yet again. But in terms, we've got some updates from the likes of BHP, South 32, and a couple of other companies this morning. Paladin Energy apparently as well, just some quarterlies. Westpac's got some leading index indicators at 10:30 in the Australian market. We were down about 60 odd points. We'll probably open up, down maybe 40 or thereabouts. I would say that with the few of these software names reporting earnings over the course of the next week, be keeping a close eye on those SaaS names on the ASX, because they've got plenty of room to bounce back to the upside. If the SaaS apocalypse is isn't as real as the stories and myths that have been told. So, overall, guys, have a great day, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.